Hello, welcome to the European Open briefing for Monday, November the 6th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. The US dollar is standing out this morning after reaching fresh 8-month highs against the Japanese yen. We are seeing that diverging monetary policy between the US and Japan once again coming under the spotlight. Also, we had a series of strong data on Friday, although the headline non-farm payrolls figure fell below expectations overall. The outlook for the US economy is looking very positive. The Australian dollar is steady this morning. We have the RBA policy meeting coming up tomorrow, so we're likely to see major moves ahead of that. And the Kiwi is down for a second day. We'll also have a policy meeting by the Reserve Bank of New Zealand later in the week. The euro and the pound are both flat against the dollar, while oil prices have reached fresh 2-year highs this morning on the back of tightening market for oil. Let's first start with the dollar. We can see dollar yen managed to break above that key resistance level around 114.50, reaching a near 8-month high of 114.72. We can see the dollar index though didn't manage to break above its October peak, but it did manage to climb above the 95 level. On Friday, we had the October non-farm payrolls report, which showed the US economy added, although there was a strong rebound during the month, it didn't add as many jobs as had been expected by economists. Although the unemployment rate fell to a fresh 17-year low of 4.1%. Wage growth was disappointing, but this didn't dampen expectations overall. This was seen as a one-off, and other data reinforced this view. The ISM non-manufacturing PMI rose to a 12-year high of 60.1. Factory orders also beat expectations. To focus this week, we don't have much major data coming out of the US, so the main focus will likely be President Trump's visit to Asia, where North Korea and trade will be high on the agenda as he meets with the Japanese, South Korean, Chinese and Russian leaders. Let's have a look at the Bank of Japan now, because today we had the minutes of the September policy meeting. We also had a speech by the governor Haruhiko Kuroda. Kuroda said that it was crucial for inflation to exceed the 2% target. This shows that the Bank of Japan is actually trying for inflation to overshoot its target. This was seen as very dovish. Also, although Kuroda did sound fairly confident about the Japanese economy, he remains committed to the 2% target, and given the distance between CPI at the moment and the 2% target, it's unlikely we're going to see a scaling back of that ultra-loose monetary policy in Japan anytime soon. Also, we've got one of the new board members arguing for looser policy. We saw that in September and again in October. The October summary of opinions are due on Thursday. That could shed more lights on what policymakers are thinking. But in the meantime, as the US economy picks up further pace, and we're likely to see a rate hike. It's pretty much certain we're going to see a rate hike in December, plus possibly 2 more next year. All of that is putting upside pressure on the dollar and downside pressure on the yen. Let's have a look at European currencies now. We can see both the euro and the pound are fairly steady against the dollar. The euro dropped a bit on Friday following the strong US data. We have a number of Eurozone data releases this week. Today we have the final Eurozone services PMI reading, as well as the Eurozone Centix index. The pound, we can see that big drop we had on Thursday after that dovish rate hike by the Bank of England. On Friday, the Deputy Governor Ben Broadbent said that although the bank is signaling 2 more rate hikes in the next 2 to 3 years, that this was not a promise. Also, Governor Mark Carney, speaking over the weekend, said did say that business investment is slower in the UK as a result of Brexit, and the UK economy could slow further if a trade deal isn't reached with the EU. So all of that is undermining the pound at the moment, although we are seeing decent support just above the 1.30 level. Moving on to the Australian and New Zealand dollars, we can see the Aussie is just about positive against the US dollar, currently trading around 0.7650. We have the RBA policy meeting tomorrow. It's going to be interesting to see whether there's going to be a shift in their outlook, given that the recent inflation readings fell below expectations and retail sales were also disappointing. Australia had one of the weakest quarters for retail sales in years during the third quarter. So if we do see a more dovish RBA tomorrow, that could lead to some losses for the Aussie. Also today we had an announcement by the Australian Prime Minister that he's decided to force all MPs to declare whether or not they hold dual citizenships following the recent scandals leading to the resignation of some MPs and cabinet members. In Australia, it is illegal for foreign nationals to be serving in Parliament. So the Australian Prime Minister is hoping to draw a line under the recent events, but we didn't see much of a reaction in currency markets to that this morning. I guess if there are no further resignations, or that could potentially lead to the fall of the government, we're not going to see much of a reaction there. Moving on to the Kiwi, it has dropped back below the 0.69 level against the US dollar, currently trading at 0.6893. We also have a policy meeting by the Reserve Bank of New Zealand that's due on Thursday. It's a slightly different picture in New Zealand, where inflation has been picking up recently. We're also seeing unemployment rate falling more than expected. So it is possible the AUDNZD could sound less dovish on Thursday. But given the fact that the new government there is planning to make reforms to the central bank, we're unlikely to see a major shift by the central bank there before those reforms have been implemented. Looking at oil prices now, we can see on Friday they rose sharply and further extending their gains today. Both WTI and Brent crude have hit fresh 2-year highs. WTI hit $56.28 a barrel, Brent $62.90 a barrel. It is widely expected that OPEC and non-OPEC will decide to extend the current output deal, which expires at the end of March 2018, when they meet at the end of November. So that those expectations have been the main factor driving up prices in recent days. Also, we've got some developments in Saudi Arabia. The crown prince there is tightening his grip on power. We had some arrests for several princes and ministers in the country by the country's anti-corruption probe, which happens to be led by the crown prince. There are fears that the move could hurt investment in the country, and also the overall uncertainty and possible impact on supply is also driving up prices. This morning we can see both WTI and Brent crude moving way above their 21-day exponential moving averages. Looking at today's economic calendar, we had German industrial orders which sharply beat expectations. We've got the Eurozone Services PMI which just came out. We're seeing the composite revised slightly outward in October's final reading, and the PMI also slightly upward. We've got the Centix index due later in the day, and the IV PMI out of Canada. That will be the main data in the North American session. That's it from me. Thank you very much for watching, and have a great day.